This is All About Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. All right, well, Bitcoin continuing a six-day winning streak, skyrocketing above $39,000. Checking in on Bitcoin for a live look, it's trading at $39,641. Bitcoin soaring into outer space, 15% up over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Looking at our top stories, well, Tether lashing out at a Bloomberg article, dismissing it as, quote, patently designed to generate clicks and repackages stale claims as news. The U.S. Department of Justice is reportedly investigating Tether for a possible offense conducted years ago, according to Bloomberg. The extent of the probe is unknown, though it may implicate some of Tether's executives in a criminal probe into bank fraud. Meanwhile, FTX is cutting its leveraged offerings, that is, the amount of debt a trader is allowed to borrow, from 100 times to 20 times leverage. CEO Sam Bankman-Fried tweeted over the weekend. A day later, Binance announced it will also reduce the maximum leverage users can use to trade futures contracts and halt its margin trading service involving sterling, the euro, and Australian dollar, as it seeks to stave off a widespread regulatory backlash.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
A short squeeze appears to have driven prices higher as those betting on Bitcoin heading lower had to sell in quick succession to cover. Short liquidations or forced closure of sell positions due to margin shortage have likely added upward pressure on prices. According to CoinAnalyze, data seen in this chart, major exchanges include Binance have liquidated futures positions worth more than $650 million today. The green bars represent short liquidations and the red bars show long liquidations. Short liquidations account for almost 85% or $550 million. The data shows that futures market positioning was skewed bearish. The number of open futures contracts rose steadily since late May to hit a 2-month high last week as traders took short positions. The crypto derivatives market has seen explosive growth since the March 2020 crash. One effect of that is price volatility caused by long short liquidations. The situation may improve going forward as Binance and FTX, two of the biggest exchanges, have imposed limits on leverage. And joining us now to discuss the crypto markets is Nick Mancini, research analyst at crypto sentiment analytics firm Trade the Chain. Welcome to the show, Nick. So folks predicted a short squeeze just prior to the weekend. They predicted it would boost the price of Bitcoin. Can you weigh in on why Bitcoin is taking off today in your own analysis?
Yeah, so what we are seeing in our global community of traders over at Trade the Chain is a very large reaction to a compilation of technicals and fundamentals over the past few weeks. The technicals were obviously, bounce at 30K, extremely oversold, triple bottom, tightening of the Bollinger Bands. There's a lot of things that we can point to. And then on the fundamental side, we had a large kind of catalyst putting Bitcoin in front of everyone's eyes and ears, meaning the B word conference. And a lot of people just really discussing these technicals that were happening. So we're seeing this move of exactly what you're talking about, a short squeeze, triple bottom, coupled with a fundamental market driver with three, large entities or people who command a lot of social media attention. And now price is reflecting based off of that short squeeze that you mentioned and a large, massive amount of retail attention focusing on Bitcoin now that the institutional crowd is done with their trade.
How sustainable is this rally? Are you seeing breaking 40 anytime soon?
Yeah, that's a great question. And I guess I'll get my crystal ball out a little bit for this one. But I do see 40K as being extremely plausible. Right now, I think it's just beginning to tip up into the 39K and above level. And I think coupled with this short squeeze that we previously had and the fact that sentiment is now at levels that we were seeing during the weekend when price was busting above, that 32K, 33K, 34 and beyond level. We're seeing sentiment increase. We're seeing retail now pile in, trying to get a hold of some of the gains that the institutional crowd was already able to grab hold of over the weekend. And I think that 40K is extremely plausible. Now, whether or not we hold above 40K is a different story. Sentiment, in our opinion, needs to stay at the levels that it currently is, meaning, above 60, 70, 80 out of a potential score of 100. And we would like to see volume continue to pour in. We saw a massive amount over the weekend, dipped a little bit. Now it's back. If spots and derivatives volume continues to pour in, then 40K, we may be talking about that, as something in the past, in a couple weeks.
Are we seeing this from more longer term holders, or is it retail that is coming back? What is this surge?
Yeah, so it's actually both. According to data that we've looked into ourselves and someone that we work with called Into the Block, in addition to the sentiment data that we offer, we are noticing that not only long-term holders growing month over month, meaning long-term, meaning people who've held Bitcoin for more than 12 months, we're also seeing that 1 to 12 month range of holders increase month over month as well. And they've been increasing at a much larger margin than the 12-month holders or longer. So the fact that we're seeing people who've held Bitcoin for more than a year continue to hold and see that number grow, we're now seeing the numbers of holders 1 to 12 months continue to grow at a larger pace as well, meaning that everyone who is kind of transformed into either a short-term holder or just entered recently is now showing conviction for the long term. So if you're thinking that supply is going to squeeze because miners are no longer offloading crypto and retail and institutional holders are grasping their coins for longer, this is showing that there's conviction for a longer term rally and people are quite bullish looking forward. And that is actually shown by the options market as well as what we're seeing in sentiment and our community of traders.
Speaking of the options market, contracts are going to expire at the end of this month, and we usually see some downward pressure. Do you see that happening?
Yes, I do think it's completely plausible. And what we're seeing right now is a kind of a massive, it is really very much on the heels of the short squeeze and why we saw so much volatility. But if retail continues to step in and we have a nice monthly close, which I think everyone has kind of been looking for now that the weekly closed with a bullish engulfing on Monday, or a Sunday evening, I should say, people are going to be looking for a strong monthly close. So we generally do see downside whenever options are closing. Traders are obviously closing their bets. They have to close out their hedges as well. This can create a lot of wonky volatility in the market. But as long as there's enough volume and buy pressure, then the buys will overtake the sells, meaning that if we're above 40K, maybe we dip back down into that 39K range just to create a little bit of confusion. But if the buyers step in, as they are currently for the past 3-4 days, then that volatility will just be volatility, and price will eventually continue higher, as we're seeing throughout the conviction from the short-term, long-term holders, options, futures market, and even spot market.
And just one last question. Another talking point we've been following is FTX and Binance. They're reducing 100x leverage. So are we seeing an impact from a potential closure of positions? Do you think lower leverage in the future going forward will make the crypto markets more stable?
Yes, I do. So to answer the second question first, I do think that this adds a bit of stability. The leverage is still high. 20x leverage is still akin to, I think another major investor said, this is akin to a bar introducing a 10 beer or 10 drink limit. It's still a lot of drinks, but it's probably going to take away some of the worst of the crowd that may come through the doors and consume too much. Meaning institutional and retail investors alike are seeing this and saying, hey, crypto's putting their smart hat on. They're putting regulations that are going to protect people in the future that may make price action less insane as we continue to grow the market in terms of investors and market cap. And I think this is actually good long term because it's going to put more trust in the market by the people who have been continuing to sit on the sidelines. They're going to see safety, security, and leadership, and actually look upon that in a favorable light. And maybe that pushes them into the industry a little bit closer than before.
All right, Nick, great analysis. Thanks for joining us.
Thank you so much for having me. Have a great day.
You too. That was Trade the Chain research analyst Nick Mancini. Coming up, more on that Tether news with our CoinDesk's own crypto OG, Adam B. Levine. Welcome back. Well, Tether did not immediately answer CoinDesk's request for comment on a Bloomberg article reporting that Tether executives may face a criminal probe into bank fraud. In a blog post, Tether seemingly implied the report was wrong without quite saying so. And joining us now to discuss is CoinDesk editor and Bitcoin superstar Adam B. Levine. Welcome to the show, Adam.
Hey, Christine. Thanks for having me.
Good to see you. All right. So federal prosecutors are reportedly investigating whether Tether concealed from banks that transactions were linked to crypto. Is this new?
Yeah, no, it's definitely not new. This has been a narrative for a long time. Tether has kind of the unique distinction among the serious stablecoin projects of having been around long enough to kind of harken back to the era where it was very challenging for a crypto company or a company that would deal at all with crypto to have a bank account. So these are charges, I think, that we've heard before. There are actually no charges. Right now, we're just talking about rumors of charges, rumors of an investigation. But it is an investigation that if you can go back to 2018, and there were similar things reported in Bloomberg at that time, although nothing materialized of it that we were able to tell.
And yet, Adam, what is the implication of this to Bitcoin? We know Tether is the third largest digital currency out there, 62 billion market cap, the largest stablecoin out there, and it's behind half of all Bitcoin trades. So, I mean, does this make the crypto markets nervous?
So I think that, honestly, Tether already makes the crypto markets nervous, irrespective of what's going on. There are just a lot of people out there who have never really believed the narrative that Tether has put out there, which is that there's a dollar, or more recently, a dollar-denominated liability behind every Tether that is out there in trade. As far as its impact on Bitcoin is concerned, Tether has played a very large role in the kind of process of Bitcoin trading to the point that it's at now. Now, a lot of people take that and they say that, well, this means that Tether is actually driving the price appreciation that we've seen. And this has long been somewhere between a rumor, a conspiracy theory, somewhere in kind of that range of things within the crypto space. Because when we are in one of these bull market situations, you often will see the price of Tether, the number of Tether that's being issued increase as the price of Bitcoin increases. Now, this could be, again, from the cynical side, this suggests that the reason why the price of Bitcoin is going up is because Tether is creating these without there being any demand behind them. That's the allegation, unproven. On the other side, there's a...
Speaking of which, Bitcoin just broke 40,000. Let's just take a look at that. You're saying that this could be another Tether pump?
Well, so I personally don't subscribe to this. I personally think that the simpler explanation is that Tether is one of the ways that people get dollars into Bitcoin. And so it's kind of is the tail wagging the dog question here. Personally, I think that it's actual money coming in from people who are wanting Tether as a way to then get in and then to trade in and out of cryptocurrency without having to go out to the external banking system. That really is kind of where Tether came from, was this sort of long ago time when it was very challenging and very, very lengthy in terms of time to get money into the crypto ecosystem and then back out of the crypto ecosystem. Tether allowed for people to not have to do that. Instead of taking money back out to your bank account, you would take your money into the form of Tether, and then you could transfer that to a different exchange. It was useful in arbitrage opportunities and still is a preferred way for many people to deal with traditional dollars. More recently, we've also seen it used increasingly as essentially an analog for dollars in emerging countries that either aren't able to hold dollars or where this is just a more convenient method of holding dollars. So that's pretty much where it plays into Bitcoin right now. It's a very important in and out, but it's a lot less important today than it was, say, 2 years ago when it was really the only serious one.
So earlier this year, Bitfinex, the sister exchange to Tether, they settled an investigation with the New York Attorney General into whether the stablecoin issue was covering up the loss of nearly 1 billion in customer funds. And is this probe related to that one? Because my sense was after that settlement that more regulators, other states were going to weigh in on Tether. And we do see that Treasury Secretary Janet Yellen held a meeting last week saying regulators need to act quickly to regulate stablecoins. Is this all related?
So we ran a Nick Carter column the other day, and I'm just going to quote directly from it because I think that he very succinctly puts it. The success of stablecoins and the attendant stagnation of central bank digital currency projects is embarrassing to central bankers and policymakers. Stablecoins offer everything that central bank digital currencies hope to achieve, but in a completely bottom-up free market way. And I really do think that when it comes to the regulatory landscape that we're talking about, there's a large element of that. To a certain extent, Tether's existence sort of proves both the importance of something like a central bank digital currency in terms of like a dollar analog that is purely digital. But on the other side, they've done it without the actual authorities involved, who would now very much like to be involved in these types of things. Now, to your question about is this similar to or related to the earlier New York case, we don't know. Again, we don't really have enough information about what the DOJ may or may not be investigating. But certainly, again, it harkens back to that whole, this is a project that's been around for such a long time that they're like now today, we kind of understand what the rules are, but there's still a lot of areas where, we're just kind of making it up as we go. And that's so much more true for Tether than it is for really anything else. Now, Bitfinex also had a pretty notorious hack a number of years back where they lost a substantial amount of money. And I heard rumors, I don't have any proof, but I heard rumors that was patched with Tether. Now, they've since paid it all back and everything was made right. Personally, I also was in that situation where they had some of my funds for a while and gave me back a recovery token, which was an interesting experience unto itself. But yeah, I mean, again, we really don't know enough about what the DOJ is actually investigating. We're just hearing the rumors and we're getting them secondhand at that.
All right, Adam, we'll leave it there. This is a developing story. We'll be reporting the facts and any new information we get as it comes. Thank you, Adam.
Thank you, Christine.
Right, that was fellow CoinDesker and Bitcoin OG, Adam Levine. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. Eastern Time for a First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.